Good morning, YouTube. Bennett Tyndall here with TradingAnalysis.com. Hey, I'd like to wish you guys a happy Wednesday morning. Hope everybody's doing okay today. As you can see, futures are limit down once again. So we'll see how things progress here into the open. We've got, oh gosh, what is it, about 45 minutes here to the opening bell. So we'll go ahead and bring in the trading analysis team and see how everybody's doing this morning. Good morning, Terry. Good morning, Alex. How are you guys today?
Hey, Bennett. Hey, Terry. Good morning.
What's happening, gentlemen? And Todd will not be joining us this morning. He is occupied at home. So we'll carry on and we'll conquer what's happening with the markets here. Certainly a lot of volatility as we continue to kind of push lower. You know, this is something that we had kind of talked about. I don't know if you guys follow our public blog posts. We typically post anywhere from once to twice a week. We've been talking about the fact that regardless of the health impact, there's going to be an economic impact. And a lot of the selling that we've seen is really fear-based. So a lot of fear-based capitulation as we can't really quantify what the bottom line impact is going to be. As we mentioned before, not only on individual company earnings and global GDP, but of course now on employment and how that's going to overall impact consumer spending. So let's go ahead and let's dive into it here. I'm going to go ahead and bring over, 1 second, guys. Looks like we're having some buffering issues here on YouTube. Let's see if anybody can verify if we're up and running here. It looks like everything should be good. Perhaps some just opening jitters as things get synced up. So let's go ahead and jump over here. We'll bring over the HYPOTHETICAL platform. And just to let you guys know, we do have an upcoming webinar. This will be tomorrow at 4 p.m. Pacific, 7 p.m. Eastern. We're kind of piggybacking this along with HYPOTHETICAL's annual spring sale. And we're going to be offering 25% off our trading analysis specific version of HYPOTHETICAL. So let's go ahead and check the chat here, see if everybody's tuned in and make sure we're not having any issues. Is the audio looking all right for you guys this morning? Thank you, I appreciate it. I'm glad you guys have been enjoying those blog posts. So let's just go ahead and jump over to it here. We'll continue pushing on and see if perhaps these issues do resolve themselves. I do apologize, guys, but it looks like our stream is solid for the time being. So guys, we've been tracking a couple of possibilities from an ElliottWave standpoint here at Trading Analysis, and as you guys know, we've been tracking the idea that this is some sort of ongoing fourth wave triangle. And while this still technically remains valid from a rules and guidelines standpoint, there are certain takeaways that you can kind of deduce from comparing this to for instance, the A wave decline. So let's get you off the weekly really quick. I want to take you down to the daily chart. And notice from the September 2018 high, so that 2940.91, I think I'll memorize that number for the rest of my life. But from that high, we proceeded to put a 535, so a standard ElliottWave zigzag correction to the downside. We have the B wave retracing a nice 61% of the A wave decline. And notice we don't have any acceleration gaps between even the high and the low of A or the high of B and the low of C. So nice clear subdivisions there, clear 5-wave moves. If you compare that to the move that we've seen off the most recent February high, things get a little bit more interesting. So let's get you off the daily down to a 30-minute chart. So technically speaking, this is a valid count, that being a 535 3-wave zigzag to complete C of that wave 4 triangle. But here's some of the issues that we have with it. Notice multiple acceleration gaps within this particular move. We also broke through the corrective trend channel. So typically speaking, corrections will exist within some sort of a parallel trend channel. And in this particular instance, we actually broke through that trend channel in the form of an acceleration gap in a likely third wave position. Also notice this C wave was right at a 1618 compared to wave 1, or compared to wave A. And typically speaking, although it is acceptable to see a C wave of a zigzag meet a 1618 target of C versus A, more often than not, you will see your C wave typically demonstrate equality or be some sort of a lesser extension of the B wave. So when you combine the acceleration gaps with the fact that the Dow Jones Industrial and Russell 2000 small caps absolutely just kind of obliterated the December 2018 lows, I think it becomes more probable that what we're actually looking at here is a 1-2 setup as opposed to an A-B move. So that brings into the picture the idea that in fact we have been existing still within those three wave moves, but making up an overall Elliott wave flat. And that would be a three wave move to make up the initial A wave of the flat, three back into the most recent September highs, and then this 5-wave decline to follow. Let me just go ahead and check chat. Are you guys having any drop frames there, or is everything looking okay? I do see a little bit of internet issues going back to one of our callers this morning, but other than that, I think we're okay. Okay, good.
Looks like it's streamed from my end.
Very good. Just wanted to confirm before we got too far into things here. So where does this leave us, guys? We don't anticipate this level of kind of fear selling to subside until we have some additional clarity on the cases in the United States. So until we see a peak and the number of infections kind of plateau and we start to see certain industry groups kind of go back to business, really, I think we'll continue to see the impact on the market. And at the end of the day, we don't know what that economic impact is going to be. And I think that's where a lot of this fear has kind of originated from. So getting you off the weekly down to the daily, we are looking at a likely wave 4 triangle that came to completion possibly yesterday. For some reason, data is not populating here. Let's go ahead and take a look at this. Let's drop down to the 20-minute. Where'd you go, triangle? There we go. So a possible smaller degree fourth wave triangle, given that limit down that we're seeing here out of the futures open. So we'll be watching for perhaps a retest of the wave 3 lows. More importantly, regardless of the intraday movements here, taking a look at the wave 3 target. So our wave 3 target of 2370, a typical 1618 objective, has been met. Below that would be the 200% at 2200. But where we see this ultimately taking the markets is following some sort of a fourth wave development. We ultimately push into this 2000 to 2100 area resistance or support. Sorry, I was just checking the chat here. Good for me. Lower the resolution and no buffering. Okay. You guys, if you run into any other issues, please let us know. So do we think this is the bottom of C of a wave 4 triangle? Highly unlikely when you take into consideration the kind of totality of our analysis and everything that we have available. I still think we have additional downside left to go. Now, let's say we get to this 2000 to 2100 area support, which is offered for multiple degrees of trend. We have an overall 38% retracement of the wave 3. We have a 1272 extension of B versus the C. And this zone, should it fail to the downside, should we continue to see selling pressure, we are proposing another alternate which still has the same implications once this 5-wave move comes to completion. And that being essentially, if I take you over here to the weekly chart, we've essentially broken through this highest degree trend channel within the post credit crisis low breakout. And as we break through this trend channel, it's kind of a natural order to retest that in some sort of a corrective fashion. So if this does prove to be some sort of 5-wave impulsive A-wave decline, we'd look for some sort of a 3-wave move back to the trend channel to ultimately take us, perhaps back to the 1800 area and even lower. So
yeah, this is scary. So this is I put this every time I start the clock. There goes my clock. Yeah, the U.S. bear market during the financial crisis was 17 months long, and it lasted from October 9th, 2007 until March 2009. And you can see that green shaded area marking the top to the bottom before what was declared And if we copy that and move that over, and what we've done by switching to this yellow count is we've actually completed the cycle degree instead of the ABC that inside of that degree, as you had in the red count. Now we're placing the cycle degree 3 at this top, and so now we're looking at a correction potentially as large as this. So this is really not my primary count, not what I want to see, and not what you guys want to see. But there is the possibility that with this pandemic and the economic effects that are happening globally, that even though we're not in a financial recession, and we're told that the banks are strong, the finances are strong, the economy's not. Small businesses are getting impacted daily by restaurants and shop owners. Everybody's hunkering down. It's going to be a struggle economically. Earnings are going to get pushed, and that's what the market's just is telling you. So.
Yeah, absolutely. We're certainly seeing a lot of fear, and we were going over this with our members, just looking at the top 10 occupations in the United States, and there was a survey of restaurants, and they were looking at the number of reservations and how they've been impacted as a result of the coronavirus, and I think that number was anywhere between 50 to 70% reduction in the number of reservations, which obviously is impacting their ability to maintain their workforce. And the number 2 and number 8 occupations in the United States are in the restaurant business. So, as you said, as people continue to isolate, and we'll continue to see this impact.
The situation is different from 2008 when you had AIG and all the big financials starting to fail, and how long it took government to decide the time before government said they're too big to fail and they started interjecting, right? So, of course, this correction is much sharper to the downside than it was back in 2008. So I think this might have caught a lot of our fund managers off guard, because typically, historically, bear markets do not begin with a sharp correction. They begin with a much prolonged rollover in the markets, and that's what historically, you go back and look at all the past bear market examples, maybe with the exception of the 1929 crash, that all of the previous bear markets of the 20th century have rolled over and taken months to develop. So there are definitely differences between what we're seeing today and what we saw in 2008. So I'm not saying I'm not guaranteeing any kind of exact repeat, because certainly the pattern, the structure of the movement is different. So.
Yeah, absolutely. And to just kind of bring that alternate yellow count home, let's just take a look at what we're seeing here in Microsoft as one of our possible alternate counts. And essentially, we're seeing a very similar possibility unfolding here, and that is off the 2009 credit crisis lows. We have this initial motive impulsive development, sideways complex wave 2 correction. We then have this nice 5-wave rally to make up green cycle degree wave 3. Within green cycle degree wave 3, we met a 2618 objective, and wave 5 was spot on equal to wave 1, which is pretty common when you have that extended third wave. Additionally, we have equality of waves 4 and 2, which, as you know, corrections of the same degree often tend towards equality. We also have the Elliott trend channel offered from that orange primary degree, waves 2 and 4 completion projected over the top of 3. To give us that wave 5 top, and that essentially puts us in a very similar 4th wave correction. And given the guideline of alternation, here we see a sideways complex. This would be calling for a more directional zigzag, taking you back to the S&P 500. As you can see here, we have a sideways flat, and this would be a directional zigzag. So supported by the guideline of alternation, and definitely kind of falls in line with potentially what we could be seeing from a longer term impact as to the fallout of the coronavirus. So I think things are going to continue to remain volatile as we as we continue to see a progression in not only the headlines surrounding the coronavirus, but of course the number of cases and just ultimately how that's handled here in the United States. We continue to see a reduction in live events. Heck, my local church is going to online only. I mean, there's just so many different businesses that are really changing the way that they do business as a result of this. And at the end of the day, obviously, that's to put a kind of flatline the outbreak of the coronavirus. So it's something we're going to have to deal with, and we'll continue to watch markets as they develop. Additionally speaking, charts such as Google. So Microsoft is a large component, obviously, of the S&P 500. Intel is only one of 4 stocks that are in the Dow, the S&P, and the NASDAQ. And if I take you over to Intel, it's kind of interesting here. Going back to the 2009 credit crisis lows, we can count a wave 1 sideways, wave 2 flat, a nice extended wave 3. Wave 3 met our 1618 target. This would put us in a sideways 4th wave cycle degree correction. Over to Google, which is a large component of the XLC. We, on the post-triangle thrust breakout, we didn't break through the origin. So this being a 1-2 possibility has since been invalidated. Sure, it could be some sort of ongoing complex 4th wave, but more importantly, we also have the possibility that this is going to exist in a longer-term 4th wave correction. So I don't think the alternate in the S&P here, which basically has us completing this initial 5-wave decline, finding support, rallying back, testing the trend channel, and then falling lower. I don't think that's at all out of the question with the kind of fundamental situation that we continue to see. The Fed meeting was canceled today. Obviously, Fed Chair Jerome Powell came out on Sunday after the emergency cut and certainly had a little bit to say there. So we'll see how the day opens up following the limit down.
Like I said, one thing you got to give them credit for is they are responding much more rapidly than they did during the last credit crisis.
Yep, that's certainly true. So we'll see how President Trump reacts to all of it, and we'll go from there. So. Guys, you want to touch on just a little bit of sector rotation, then we're going to have Alex come in and get us up to speed with what's happening from a macro standpoint.
Okay.
Let me go ahead and get you set up here, Terry. All right, passing the screen your direction when you are ready.
Yeah, it's ready. Go ahead.
Okay, coming at you.
All right, guys, so what we've got here on the left, this is a price performance chart over the last week, and you can see all 11 of the sectors were down tremendously. Technology, again, in line with what we've been telling you about technology remaining the strongest. While the whole market has moved down, the technology's moved down the least percentage last week, with energy being the worst performer. What's interesting in this past week here is utilities, which we've been telling you, utilities is typically a defensive sector. Utilities has been rising on the in the improving quadrant, yet the relative strength has not surpassed the S&P, and that was my story for the last several weeks. Look at this. Look at the huge drop. 14% down in utilities. We'll cover this in a little bit more detail. Here's materials. Here's industrials. Discretionary, and then you got financials sitting here right in the middle. So yes, a very ugly week all the way down, all the way across the board. This is the weekly rotation, and again here with relative strength ratio across the bottom, relative momentum strength across the top. Again, just because things are pointing higher doesn't mean the price of these things are going higher, right? It just means that they're outperforming the benchmark, which is the S&P, which is going to be the origin of this chart here. So we have our improving quadrant here, and here's utilities, right? So if I bring up a chart of utilities, yes, even though it's pushing higher in the leading quadrant, utilities is taking it on the chin, right? So utilities is not a flight to safety for sure, and probably neither is real estate. Take a look here. Here is real estate, right? So this is not the risk off trades. Technology is still sitting out here. It's not actually been moving much from the zone. If you look here, there's 4 bars here, so this is 4 weeks. This is a whole month's worth of movement, XLK has really held its own, sitting out here at about 105% relative strength and about 101 on the relative momentum. So what we do have rising rapidly, though, is the real estate, utilities, and staples, and we'll dive into staples here and look at those. Communications is also here in the leading, but it's still underperforming technology. Healthcare is the one that for obvious reasons in this coronavirus scare, I think there's many healthcare stocks that are starting to see some improvement. So it had pushed down into the weakening quadrant, but again, here's your daily price chart. With the overall market push down, healthcare, everything is broken down past the 200-day moving average. And you know what this is down here, energy. Energy is in poor shape due to the ongoing price war with Russia and Saudi Arabia. I'm going to jump straight over into, let's take a look here at consumer staples, because this is probably the one thing that's on everybody's mind. Is there toilet paper at Walmart? Okay, so here's Kimberly-Clark, right? So look at this. This is on the daily. This is a daily rotation, not the weekly. So this is telling you that in our staples, look at this huge flight here. Look how far these guys are pushing in the daily. I'll pull a chart of Kimberly-Clark up. It's certainly not one that has avoided any of the downfall, but it's certainly got some pretty huge recovery going on. This is a one-day chart, so you can see quite a bit of volatility here, but Kimberly-Clark actually holding back up above the 200-day moving average. Gee, I wonder why. Walmart, a lot of the Walmart stores, Costco is right here. Walmart stores, I know in my area have. It was a good thing they started online shopping services where you can pre-order all your groceries. Just go use their app, go down the list and order everything, and then set an appointment, drive up, and they'll load it in the back of your car. You don't even have to go wandering around. I thought this was a great idea even before the coronavirus came out, because it meant that I didn't have to spend so much of my own time wandering up and down the rows of aisles looking for one specific product that I had. It just thought it was. How many of you guys have done that before?
It's a good thing, because the Walmart stores right now are just absolutely slammed and low on inventory, obviously.
Yeah, but it's good if you want to, especially with this the quarantines that are going on, and you can avoid getting out in public. Just stay away. But here's consumer staples. Not all stocks in the staples sector. Here's the food service, Cisco. Your restaurants are doing horribly. A lot of the restaurants are only all the sit-down restaurants are closed now, and they can do takeout, pickup or takeout only, and even some places the pickup's not allowed. Constellation Brands. Gee, I wonder why this one's diving. Todd, maybe Todd can talk to that one. And Tyson Foods here. That's a peculiar. Tyson Foods, Archer Daniels Midland. Here's Coca-Cola, just kind of wandering around, not doing a whole lot there. So that is that's consumer staples on the daily side. Let's take a look into our healthcare.
And that was using the S&P as your benchmark, right? Not the ETF sector.
Exactly. That's that was S&P as the benchmark. If you want, I'll go back here and let's take a look at this. This chart here. Yeah. So inside the XLP, let me make some of these images a little bit bigger so you can see those symbols. But inside the XLP, compared to the XLP itself, it's Monster Energy and it's Colgate-Palmolive, and some of these other groups. These are the ones that are actually leading the XLP, right? So it's Kimberly-Clark is up in here somewhere, buried. There's Kimberly-Clark right there. So yeah, these are the leaders, leading the S&P, and as also leading in the XLP sector itself. Let's jump back over to healthcare. Let's take a look at the healthcare. So this is healthcare, with respect to the S&P. And we are on the weekly chart here. So the weekly chart, I had been touting Eli Lilly for quite a while. You know, here's the rotations. But we had been seeing coming into the first of the year in January, February, you know, we saw healthcare rotating out until this coronavirus really took effect. We saw these biotech stocks basically pushing lower into the weakening quadrant, along with United Healthcare and several others starting to break down. And so the healthcare actually was leaving the leading quadrant. And then all of a sudden now we're starting to see some hooks. You see these hooks happening here in several of these stocks as conditions with the virus worsen. You can see some of these bio stocks here, a hook in them, reversing out of this weakening quadrant, and United Healthcare. All of this happened week ending March 6th. And now here we are with the data, current data, week ending last Friday, and I think this data might include a couple of days of this week here too. Eli Lilly, Zoetis, Gilead Sciences, Johnson & Johnson, and here comes United Healthcare, AbbVie, I don't know how you say that, Bristol Myers, right? So we're seeing a return to the healthcare stocks back into the potentially pushing back into the lead. Now, again, if we do the same thing and we actually compare stocks in the healthcare sector with the XLV itself, this tells you who are the leaders of the leaders, right? Regeneron, Eli Lilly, Zoetis, and Gilead's pushing over here from the improving quadrant with a quite a rapid push up higher in momentum. But these stocks are not without their danger here.
And guys, just to clarify, I had somebody message me and say, "Hey, how are these outperforming? These stocks are down." Well, simply put, they're outperforming whatever the benchmark it is that we're comparing them to. Yes. So, outperforming in a downtrending environment.
Here's one that's very volatile, but it's not down. Okay, so this is Gilead. This is a daily plot of Gilead. So I'll tell you, go pull that one up. We're riding high above the 50-day moving average right now. We did have a spike below the 200 for one day. And then now look at it, right? So yes, all of this, there are very few stocks that are outperforming the index, but yes, with everything down, again, this is all relative, right? So the ones that are outperforming up here in the leading quadrant are the ones that have taken the least amount of hit, and they're going to be the most resilient as we come out of this episode. So that's where we're going to be looking for. Let's take a look into staples here. Let's see what's happening in consumer staples. Again, Amazon is the only stock that I see in the leading quadrant, although there's a few, and I wonder how this is going to ultimately affect McDonald's. I guess it hasn't affected them too badly. They are pushing higher here, but again, anything to the left of this axis here means relative strength performance is less than the S&P. So I would imagine all of these stocks are down heavily. Amazon being down the least. Here is a price chart of Amazon. You can see it dipped below the 200-day. It came back up and bounced off of this. This is not, not a great chart to trade from, but certainly I think I can see 1, 2, 3 bounce back up here in 4. So
Amazon should be consumer discretionary, right?
It is. We're into consumer
okay, sorry, I thought you were still in staples. Yep.
I switched out of healthcare over into discretionary.
So Lulu, okay, I was just working the Lulu chart the other day. I was curious.
Here's Lulu. Yeah, Lulu's pushing into the weakening quadrant.
Yeah.
Some of my data didn't update and I have to suck it in. There we go. Not looking good. It's obviously just tracking along with everything else, but as it's weakening, this is on the daily chart. Let me switch you to the weekly chart. So again, looking at the weekly performance, we're running above the 200 week moving average, but it's still taking a hit. let's take a look in technology, because technology is where things may be down, but they're still stronger than everything else in the market. So again, this benchmark is against the S&P. So you got stocks such as, let me make this a little bit larger. There you go. You got Adobe, here's Microsoft, NVIDIA. Relative strength still way out here with NVIDIA. But here's a price chart of NVIDIA. These are weekly bars. So NVIDIA ran up here to 312, pulled all the way back down to 192, and is now settled in around 215. So yeah, that's a 100-point drop. But it is. This is a daily, so it's riding right there on the 200-day moving average, right?
Just goes to show you. Yeah, exactly. Just goes to show you how extended we have been over some of these more traditional moving averages.
Right. We were really extended. Again, you know, that's 113, 114 points, maybe, or 120 points above that 200-day moving average, riding really strong, and then all of a sudden, here comes a collapse.
Very good.
But hopefully there is light at the end of the tunnel. I think we're hearing some positive news on some potential vaccines in early testing stages that could shed some light. This is the tech sector relative to the XLK index ETF. And so these are the leaders of the tech leaders, and we're talking Adobe and Microsoft, NVIDIA, although I am seeing a little bit of a hook here. Right, here is Adobe. And all I got is Friday's data there. We'll get this updated. So yeah, Adobe's holding pretty good right here around this 200-day moving average. Again, it was extended up here at 382, pulled down, dropped 100 points. You know, that's, you know, there's your 25% drop that the overall market dropped, right? So
they had a pretty good earnings report, if I remember correctly.
Yeah, I think so. I think you were going to talk Microsoft. And here's my chart of Microsoft. This is a daily. This is a daily price chart here on Microsoft too. All right. So anybody have anything? You got any specific looks at? I do want to switch over here to the sectors. I want to show you what I was seeing in the movement in the tech sector here. Let me reload this new format here.
Yeah, let's take a look at that, and then we'll transition into Forex.
Because what I was seeing the other day when I was seeing the tech sector moving higher, the semiconductors were actually lower than the overall XLK. And so what that was telling me is the story is not the semiconductors being the only thing holding the tech sector up. This is a weekly. I'm going to switch it to the daily. Let's take a look at what's been happening in the near term. Excuse me. Yeah, so in the near term rotation, you know, it's semiconductors. There's very few of them are actually leading, and even those ones that are leading are starting to push lower. So a lot of volatility. The stock market jumping up and down 10% one day, 5% the next day, et cetera, et cetera. It's kind of hard to really tell what's happening in terms of leadership with this. I am seeing some positive direction here with AMD and Qualcomm, but the semiconductors by themselves, I don't think was the don't think that was the only thing leading us out. So again, I think it's the combination of maybe a little bit of semiconductors. This is the software group, which we talked about, Adobe, Microsoft, and CRM. And then you also have the IT services group, such as PayPal, VeriSign, Leidos, and Visa, MasterCard, Fiserv. All of these guys are in this IT services. So there's a fairly large push over here, but then in the IT services group by itself, there's a lot of bad stuff too. So it's selective. It's very selective. Picking out the leaders. This is a good tool, I believe, to pick out the leaders once the consolidation settles down, volatility starts to shrink a little bit, we'll be able to identify stocks in solid positions to play the leaders and be the first ones to do catch up. So
yeah, and I was kind of discussing that with our members that, like, look, we are in a very volatile environment. Look, where spot VIX is trading right now, but take into consideration even the ElliottWave count, we're going to see opportunities along the way, even in the equities world. So
this reminds me of what's been happening with healthcare. This is the banks, the large bank group, and the XLF. I mean, they're just with the interest rates cut to near zero. Bank earnings, forward earnings are just catastrophic here for the banks. Look at this. So everything was rushing to the lagging quadrant. There is no bank sector stock that's
leading at the moment.
In good shape right now. I'm not really sure. I see in the capital markets, I see MSCI doing pretty good. Let's see. This is the insurance group, I believe. And here's Warren Buffett sitting right here in the middle. Berkshire Hathaway.
He's got his cash ready.
Million cash ready to go buy everything at bargain prices.
All right, very good, Terry. I don't want to keep people too long this morning, so anything else you want to cover before we jump over into a Forex macro update?
No, I'm good.
All right, very good. Let me go ahead and switch it back here, and we'll get Alex set up before jumping over and getting us up to speed there. Yeah, you know, we've been watching the move in TLT and yields, and even in the most recent period of consolidation that initially was looking like possibly a fourth wave position. Alex, myself, Todd, Terry, we've all been looking for that move to move lower in yields, higher in bonds, and we're definitely seeing that unfold as the U.S. kind of catches up to the rest of the world here. So. All right, Alex, we have your screen. Let me know when you're ready, sir. I see
guys.
Yeah,
that's just a GIF. You can post and start with this because I think we have been following this wave count for almost a year and a half, and Todd was actually as I know, the first one to be and predicting this triangle a long time ago. So I just I'm saying this from the guys that says, and I see some comments that we were long. No, we were not long. We also considered as well this wave count, which played out on the end. We might become a bit bullish on these levels at 3,400, but we still had this wave count in the back of my mind, which our mind, which actually materialized. So it is not quite true that trading analysis was wrong, and that is my point. So if you look up back and scroll the previous episodes of our YouTube channel, you will see that we are tending to have a balanced view, and we consider multiple wave counts in order to grasp what's going on. Okay, so
very true.
Just a few updates on the Forex markets. I'm going to start with a very interesting chart from the dollar ruble. As we know, there is a price war between the Russians and the Saudis, and oil is also in turmoil because of the latest move down in global economy. So if we look chart through the currencies, and if we look the dollar ruble chart, we are seeing the dollar moving up, and I don't think this move up is still finished. So by looking at this chart, we can maybe tell how long this war will start, or how long this war is going to last. And if you see a triangle in the fourth wave position, we are moving up to this 94, 96 levels. We are at 79. So it means that the Russian central bank will probably lift up the rates in next few weeks to keep up with the ruble weakening, and this to be expected to last a little bit more in future. So by looking these currency charts and looking the wave structure, you can maybe determine how long of this turmoil will actually last. And actually we did that in the past with looking for some currencies charts, which can be a very good predictive tool for the rest of the market. So I just want to warn you on this oil price. Looking at this, it's probably it's still gonna go with some minor corrections further lower, and the dollar ruble is still gonna go high. We see also in all of this what's going on that dollar is a very asked currency, and dollar is actually strengthening, but that's not due to a dollar zero rate. As you can see, Fed lowered the interest rates almost to zero, and dollar is going higher. And why is that? This is because the EEM countries, or the offshore dollar funding market, which is called euro dollar market, lacks the funding in US dollars. And that's why if people is asking why is dollar going up, it's not because of the safe haven status so much. It's because of the euro dollar markets, when the LIBOR, which is a London rate, which is announced every day, is going up in the last few weeks. So that is the clear sign that the demand from dollars comes from the outside of the USA, and it's connected with the offshore dollar funding markets. And I'm surprised that Fed didn't do anything on that account, and I think that United States doesn't need strong dollar in this situation at all, and I expect some action from Fed and some swap lines on that end. Otherwise, strong dollar might kill the EM markets completely up in the next month or two. We can expect that the economy is going to slowly recover, and that will be relatively sell gold. And we are now going to stick to both scenarios, but in one moment, if we see 1,300, 400 breaks, I think scenario for the gold will kick in play, because if gold up to now didn't serve as a safe haven bid, which was initially designed in the first moves of the Fed rate cut, we can conclude that something difficult is also happening there. One of the things are that gold are sold to cover the margin calls and stock positions, and also for the dollar liquidity. And the other situation is that actually in this type of a crisis, dollar will not be a safe haven bid, and we're going to continue lower. So be careful with gold. For now, we don't see this type of development, possibly 1-2-1-2, but I don't think that we have to be very careful here with the dollar yen not moving lower. Okay, guys, so be careful in gold. Don't bet the farm on it, because if the situation calms down and we see a three-wave pullback here, only actually the gold will be sell down for this either a big triangle and a ABC wave, or for the third wave down. Some of the clients ask us to look for the silver, and for now silver is also bearish on this wave count, looking for a 8 at least, and even lower. So be careful and look for these 8 levels, because you can count 5 waves here, and then we have a B, C, D, E for a B wave triangle, and possibilities that we're gonna go either to 8 or to 5. Okay, so look for these 2 levels, which I think it's gonna be a great buy opportunity. For the crypto markets, we have warned that this, and few weeks back, that this might turn into a big triangle. And now we are faced with several possibilities. Either this is a triangle, we still have a bullish wave count. This is a wave 4, up in 1, down in 2, and we continue up. I don't think that's a probability. because the VAR, or the value at risk measurements in many of the hedge funds and funds has jumped to the roof, and I think that the big funds were selling their crypto positions in order to reduce volatility on their own portfolios. So I think the best option which it can happen here on a Bitcoin is a triangle. So we go a little bit lower, around 3,200, then we go up in the NE, and we go up with the S&P, because we've shown the correlation between the S&P and the cryptos are relatively nice. My worst case scenario is that very well goes with your wave count, Bennett, that we are just in A, we go up in B and down in C, and I think this will provoke this WX, and we're gonna go in Y, which might take us in a Bitcoin to 1,000 level, 2,000, 1,000 level. So we are going to see actually what we are prepared for all of these scenarios, and on the smaller time frame, we actually look this as a fourth wave triangle, and we are looking for potentially buy levels here around 3,200 levels. Okay, so cryptos went incredibly lower. Actually, Bitcoin was holding pretty good. The other ones sustained pretty big technical damage, but the Bitcoin is still in this triangulation possibility. With the most bearish wave count in this Y wave, which is also very possible. So we didn't trade much with our members. We are keeping our powder dry, and we're gonna wait, trading very small, very lightly with a very small stop losses, trying to catch some of the moves on the corrective pullbacks. And we're gonna look to buy cryptos when all of this finishes. I think cryptos is going to be a bargain, especially some of the alts. On the alts, we are looking this Ethereum to come around, let's say 10.9 levels, which I think it's gonna be a very big bargain to buy them. So I still see this as a consolidation channel. I'm looking for a little bit more downside. This is the previous fourth wave, which acts as a support. We are already there. I'm expecting a little bit more up and down, and eventually 10 and 9 levels. So I think it's going to be a good opportunity to load some of the cryptos very cheaply, and this goes for almost every of the cryptos. As regards of some other currencies, if you look the Aussie dollar, which is on my list to buy, we are breaking the support levels, and possibly we're going to see lower, but as I look, the crisis is going to diminish in the next month or two. The Aussie is going to be first on my list to buy, because I see a possibility we're gonna go a little bit lower, and this is all going to be a very good investment levels, because I think the pullbacks will last for a year or two, or even 3 in many of the currencies. So we see explosion of volatility, and I think it's there to stay.
Hey, Alex.
So any question, guys?
Yeah, I don't mean to cut you off. It looks like
screen.
Yeah, let's try that and see if that
maybe
goes. Terry, would you mind sharing your screen here before we wrap it up, guys? Just a little live troubleshooting. Is the green gone? It looks like our packet loss has gone away now. So yeah, markets just opened up here, guys. We'll continue to keep track of movers here. And yeah, Terry, if you could just move some charts around and make
it looks normal.
Give me some
resolution.
Frame.
Looks down.
Yeah, I dropped that just to be.
Can you switch back to me, please, Bennett?
Absolutely, I'd be happy to. You want to pass the screen his direction, and guys, I appreciate you joining us. We're going to have a guest. We had a guest lined up for today. We had some technical issues. We will be getting that squared away, and we'll definitely have him back. I'm excited to be. Yeah, it looks we're gonna get a little double effect there as you're watching our stream. But
is it fine now, Bennett?
Yeah, yeah, I think everything cleared up. So, guys, we're about 10 minutes here into the open. We'll continue to watch. You know, we anticipate additional volatility. If you subscribe to our YouTube channel, our Trading Analysis YouTube channel, in addition to posting our public blog updates there on our main Trading Analysis website, we're also going to be posting them on YouTube. So give it a thumbs up, subscribe if you enjoy the content, and be sure to check us out at TradingAnalysis.com. Stock, options, Forex, cryptocurrency, and we'd be glad to have you guys there. So we also have a webinar coming up tomorrow. If you guys have been interested in purchasing MotiveWave, you haven't had a chance to do so, we're piggybacking a webinar along with sharing that screen just for some reason lags it. We're piggybacking a webinar along with MotiveWave's annual spring sale. So hope to see you guys there tomorrow, 4 p.m. Pacific, 7 p.m. Eastern. And anything else you guys can...
You want to give them that URL?
Yeah, I'm gonna post it in the chat.
Yeah, Bennett, can you look quickly? Many guys in the feed ask for TLT and bonds. Can you just go over it for a second?
Yeah, do you mind? I unfortunately closed things up trying to get rid of the lag here, so I don't have MotiveWave open at the moment. I was
my one will turn green, so it's lagging. It cannot be.
Bring it up. Let's see what happens here before we wrap things up, guys.
Let me first find if I can bring up the Trading Analysis MotiveWave. Just a second. But are we off from the? Just a second. Something is wrong with the feed. Just a second.
We addressed the TLT and bonds in the public video update that we posted yesterday. If you guys want to check that out.
Oh, that's great. You already addressed it. So just drop them a link from your public thing. And
yeah,
that's fine,
I'll share that.
Because I have a problem with it.
All right, guys. I appreciate you hanging in there. Apologize for the kind of end of stream little jitters there. It happens. It's technology. It's either your best friend or your worst enemy at times. So thanks again for joining us. We look forward to seeing you next week. And yeah, everything is okay with Todd. In fact, if you've been watching the chat, I believe